Let's be honest. What are most retail investors doing right now? They're jumping from one meme coin to another, chasing easy multiples on Solana or trying to guess the next trend in AI tokens. And you know what? That is normal. The crowd always reacts to noise. But what are the so-called smart money doing at the same time? What are Wall Street funds, investment banks, and major corporations doing? They are not scalping 5-minute charts. They are playing chess years ahead. And right now, their main piece on the board is HBAR. Why exactly now? Just look at the calendar. It is March 2026. We have a new Trump administration in power that from day one said, America will be the crypto capital of the world. But words alone are not enough. Wall Street needs clear rules of the game. They need legal certainty. Institutions cannot just open an account at some crypto exchange and buy $1 billion worth of token. Old laws and the SEC's insane policy of past years were blocking them, but now everything is changing. And the trigger for this shift is the Clarity Act. Section 2. Clarity Act, the holy grail for the crypto market. So, what is the Clarity Act, and why is the entire banking sector shaking over it? Officially, it is called the Digital Asset Market Clarity Act. It is a bill that already passed the U.S. House of Representatives in 2025 with overwhelming bipartisan support, 294 votes to 134. It is now in the final stage in the Senate. The amendment deadlines expired on March 1, and we are literally one step away from it becoming law. What is the essence? In simple terms, the act does two critically important things. First, it draws a thick line between what is a security, that falls under the SEC, and what is a commodity, which goes under the CFTC. For decentralized networks like Hedera, this is a green light. HBAR gets commodity status. No more lawsuits, no more legal uncertainty. Second, and most important for our topic, the act kills the infamous SAB 121 rule. Think about this. Under the old rule, if a bank wanted to custody crypto for its clients, it had to back those assets 100% with its own capital. In other words, if a client wanted to buy $1 billion worth of crypto, the bank had to freeze its own $1 billion in reserves. That was economic suicide, so banks simply stayed on the sidelines. The Clarity Act removes this barrier. The moment the president signs it, the floodgates open. Banks get the right to custody digital assets legally, cheaply, and safely. And they know that day is close. That is why they are not waiting for the law to be signed. They are accumulating HBAR right now while prices are still on the floor. Section 3. Why are banks choosing Hedera, HBAR? Here many people ask a logical question. Okay, banks are coming into crypto, but why HBA? Why not Ethereum, Solana, or Cardano? The answer lies in Hedera's architecture and in how corporations think. Banks hate surprises. They hate unpredictability. Imagine JP Morgan or Bank of America. They want to launch a payment system on a blockchain. If they choose Ethereum, today a transaction may cost $2, but tomorrow, when a new NFT collection drops and the network congests, that same transaction can cost $50. For a business that processes millions of operations per day, that is a disaster. Now let's look at Hedera. It is not even a classical blockchain. It is hashgraph technology, speed, 0 transactions per second, security, top-tier aBFT, asynchronous Byzantine fault tolerance. This is essentially a military-grade security standard, and most importantly, fixed fees. A transaction on Hedera always costs a 10,000th of a dollar, $0.0001, and that price is fixed in USD, not in HBAR. A bank can plan its IT infrastructure budget down to the cent for the next 5 years, and the cherry on top is the governing council. Hedera is not run by anonymous devs from a basement, but by a council of 39 of the world's largest corporations: Google, IBM, Boeing, Dell, and as of March 5, 2026, logistics giant FedEx as well. Banks feel comfortable working with names they know. When a bank sees a network governed by Google and Boeing, trust questions disappear by themselves. This is a fully institutional-grade story. Section 4. The era of RWA. How tokenization of real assets explodes demand for HBAR. This is what banks are actually buying HBAR for. 3 letters. RWA, real-world assets. Listen carefully. This is the trend that will turn the crypto market into a multi-trillion-dollar industry by 2030. Larry Fink, the CEO of BlackRock, openly says that the next generation of markets is the tokenization of securities. What does that mean in practice? Imagine a real estate fund, Apple shares, US government bonds, or even physical gold. Banks take that real asset and issue its digital representation, a token, on Hedera. Why? Because this eliminates intermediaries, brokers, and clearinghouses. Trading runs 24/7, settlements are instant, and costs drop almost to zero. And Hedera is an outright leader here. Why? Remember the British bank, Lloyds Bank, and investment giant Aberdeen? They are already testing tokenization platforms built on Hedera. There is a platform called Archax. It is the first regulated digital asset exchange in London. Giants like BlackRock and State Street are already minting their money market funds directly on Hedera via Archax. More than $10 billion worth of assets have already been processed. Hedera is perfect for RWA thanks to its built-in compliance features. It has KYC, Know Your Customer, and AML, anti-money laundering, at the protocol level. Banks do not need to write complex smart contracts from scratch. Everything works out of the box. On top of that, the Guardian platform on Hedera is now dominating the tokenization of carbon credits, the ESG market. Just recently, in early March, they crossed $1.1 billion in tokenized environmental assets. Once the Clarity Act is passed, banks will no longer need to hide. They will begin migrating trillions of dollars of liquidity from legacy servers into a public hashgraph. And for every transaction, for every movement of a tokenized stock, they will need to buy HBAR as the gas of the network. That is where the fundamental demand comes from. Section 5. Whale footprints. On-chain proof of accumulation. You might say, Insider, it sounds great, but where is the proof? Where are the numbers? And the numbers on-chain do not lie, my friends. We can see everything. Let's look at Canary Capital. This is an institutional fund that launched the first HBAR trust back in late 2025. It gives large players a way to get exposure to HBAR without using crypto exchanges. As of the first week of March 2026, Canary Capital have increased their reserves to a colossal 532 million HBAR. That is more than 1% of the entire circulating supply. On just a single day, March 4, we saw an inflow of about $1.06 million. This is not retail buying for $100 from their paycheck. These are funds loading suitcases of money. If we open a Network Explorer and look at whale wallets, those holding 10 million HBAR or more, we see their number has grown by almost 92% since last August. Moreover, there is a massive outflow of coins from centralized exchanges, Binance, Coinbase, to cold wallets of institutional custodians. A supply shock is forming right before our eyes. Coins are being drained from the open market. When the retail investor finally shows up, and they will once HBAR is at $0.50, there will simply be no one willing to sell cheap because the banks will have locked their HBAR in vaults behind their RWA infrastructure. Section 6. Technicals and strategy. What should we do? So, macro is on our side. Fundamentals are extremely strong. banks are buying. What does the chart say? Let's open TradingView. At the time of recording this video, we are trading in the $0.09 to $0.1 range. A lot of people complain. Why is HBAR so slow? Why is it not doing tanks in a week like meme coins? You need to understand, institutional grade assets do not move like that. Smart money accumulate positions in a way that does not push the price too early. They are quietly eating up limit sell orders, forcing weak hands to dump their coins out of boredom. This is a classic wick-off accumulation phase. On the daily time frame, we see a strong base of support forming around $0.08. This is the golden Fibonacci ratio, 0.618, from which we are consistently being bought back up. On the 4-hour chart, the MACD has printed a bullish cross, a golden cross. The relative strength index, RSI, is hanging around 55. We are nowhere near overbought. There is huge room to the upside. Nearest targets, a breakout of local resistance at $0.12. Once we consolidate above that, there is an air pocket all the way up to 0.16. Medium-term target, summer 2026, on the back of the Clarity Act signing, is a move into the 0.35 zone. That will be a psychological breakout. The big target by year-end, with fully fledged banking RWA platforms going live, is a retest of the 2021 all-time high at 0.57 and a push into the 0.6-0.8 range. My strategy. I am not using big leverage here. This is a spot asset. My tactic is DCA, dollar cost averaging. I am systematically adding HBAR on any dips below 9 cents. And most importantly, I am sending it into staking. The network pays steady rewards, and while we wait for the price explosion, the number of our coins keeps growing. Conclusion. Time to decide. Friends, let's sum it up. We are at a unique point in history. The Clarity Act is not just another piece of paper. It is a legal bridge between the old financial system, with its quadrillions of dollars, and the new blockchain-based economy. The banks have already chosen their tools. They do not need dog and frog meme coins. They need mathematically proven aBFT security, predictable $0.0001 fees, and the legal comfort of a governing council that includes Google, IBM, and FedEx. That is why Canary Capital, BlackRock, Aberdeen, and dozens of other giants are already integrating Hedera into their real-world asset, RWA, tokenization workflows. They are accumulating HBAR because it is the fuel of the future financial system. The choice is yours. You can keep trying to catch random pump and dump moves in shitcoins with the risk of losing everything. Or you can stand in the same line as smart money, be patient, and take your profit when the institutional machine starts running at full power. Drop a comment below with how much HBAR you are holding and what price you are targeting by year end. Personally, I am betting that $0.5 will arrive faster than most people expect. If this breakdown was useful, I want a big like and a subscription from you. Make sure to hit the notification bell so you do not miss my emergency market updates. This was Altcoin Insider. Respect your risk management, drink your water, lift your weights, and I will see you in the next video. Bye for now.